U.S. stock markets closed lower on Friday as investors reacted to President Donald Trump's nomination of former Federal Reserve Governor Kevin Warsh to succeed Jerome Powell as Fed chair. Markets also weighed fresh earnings, a stronger-than-expected inflation reading, and renewed concerns about a possible U.S. government shutdown. Investors viewed Warsh as a relatively hawkish choice, signaling less aggressive interest rate cuts than some had expected. His nomination prompted a reassessment of risk, pushing the dollar higher and weighing on precious metals. Michael Landsberg, Chief Investment Officer at Landsberg Bennett Private Wealth Management, said recent market declines reflect profit-taking after strong gains, alongside uncertainty around the Fed leadership transition.
I think part of we've had some good earnings, and I think that's being overshadowed by obviously new Fed appointment, for the chair. As dollar has rallied, it's caused some of the precious metals to dramatically decline. I think that's having across the board, kind of revaluation of some risk assets. So when I look at that, I don't think it's a big issue. I look at some of the earnings that came out, and a lot of them were good. So I think it's kind of one of those things where things have been up a lot. This is an opportunity to take some profits, and I think on some of these things, specifically in metals, I think there's probably some margin calls because things are up still over 100% from a year ago, and I think people thought it would go on forever. I think there was concern about the level of Fed independence, and I think Warsh is a guy that's probably going to be a little bit more independent than some of the other candidates may have been.
Landsberg said Warsh is seen as more independent than other potential nominees and unlikely to simply rubber-stamp deep rate cuts. He added that while Warsh may still lean towards easing, his focus on growth and a stronger dollar has unsettled some investors.
I think Warsh is a solid pick, and the reason is he's not going to rubber stamp just cutting rates. I think he's going to lean towards cutting rates, but he's been skeptical of the Fed in the past. He's definitely a pro-growth guy, and I think he'll be in an environment where when they do cut rates, I think growth runs for a while here. So I think that's positive. I think part of the reason I think gold has sold off and silver has gotten crushed today has been the fact that he's maybe going to defend the dollar a little bit more than say somebody else. So I don't think we're going to see 4 or 5 cuts this year that would have put the dollar into a very big hole and would have continued to rally metals, because I think there was some group out there that thought, well, hey, precious metals are going to replace the dollar kind of around the world. I think a Warsh appointment kind of throws that out the window. I think he's got a bias towards lowering rates, but he's got a bias, more importantly, towards strong growth.
Beyond monetary policy, markets were also digesting mixed earnings reports and a rise in producer prices in December, which raised concerns that inflation could pick up in the months ahead. Geopolitical tensions, including strained U.S. relations with Iran, added to investor caution. At the same time, fresh hurdles in the Senate revived fears of another government shutdown if funding agreements are not secured. By the close, the S&P 500 fell just under 0.5%. The Nasdaq dropped nearly 1%, while the Dow Jones Industrial Average ended modestly lower. Despite the pullback, analysts say markets remain focused on the outlook for growth, interest rates, and how much independence the Federal Reserve will retain under its next chair.